If you don't want to spend days, weeks or months holding a trade, then stay tuned and learn about a 5-minute strategy that has been proven to actually work. Now, for beginners who don't know what scalping is a trading style that specializes in profiting off of small price changes. Scalping requires one to be disciplined when it comes to risk management. One big loss can take it all away. Trading is a business. If you feel like gambling, try the casino. Let's get right into it. If you're new here, don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. What is market structure? Market structure is a trend following tool that we use to read and follow how an asset moves from bearish to bullish and in between ranges. Let us dive into some charts. The most important thing to understand when you open up any chart is the market structure. The first example that we're going to look at is an up phase, and within an up phase we get consecutive highs and higher lows, higher highs and higher lows. The second thing that we want to focus on is the zone responsible for the break of market structure. Now when you look at this example right here, we had this higher high right here, and as you can see, as the market is coming from this order block, this is the zone which is responsible for the break of this structure, giving us a new higher high. This area then becomes our points of interest, meaning as we are looking for these trades in the 5 minutes time frame, this is the area where we want to look for our buy positions. Same applies for the sell side. Right? Within a down phase, we've got lower lows and lower highs, and we want to focus on the zone responsible for the break of that structure, and that becomes our points of interest. For further confluence, we're going to add the 13 and 50 exponential moving averages to increase our probability. Stay tuned as we go deeper into it after the break. Have you been struggling to make consistent profits in the forex market or not had enough time to analyze the markets and trade? At MMK, we have experienced and qualified traders who analyze the markets and send signals directly to your phone. We are highly selective traders and we provide 5 to 10 signals weekly and a minimum pip count of 1,000 pips monthly. Join the winning team and stop donating your money to brokers. By adding the 13 and 50 EMA, we get to increase our probability. But remember, there is no 100% strategy in Forex, so always manage your risk. The first thing that we want to look at is the crossover of the 13 and 50 EMA after confirming the market structure. If the market structure is not clear, rather look for another pair. So as you can see in this example, after having the 13 and 50 crossover, what we wait for is the first pullback to the 50 EMA. The 13 EMA is the red one, the 50 EMA is the blue one. And as you can see, after this crossover, we had the first pullback at this area. But as you can see, that pullback happened after there was a confirmation of price and market structure. As you can see, we had this area being broken, right? So this was a break of market structure, and the zone responsible for that break of market structure, sorry about that, is this area just above that, as you can see right there. And you can see that the first pullback was actually given at an order block. And as you can see, we had a nice flow of price. Now, in this case, managing your risk is very important. Depending on your trading plan, at least have a 1:3 risk to reward ratio in order to stay in the game if you do have any losses. Remember, there is no 100% trading strategy in Forex. And as you can see, this also applies to the upside. As you can see, as market was ebbing and flowing to the upside, we had market structure being broken at this area. But remember, in this case, we'd want to see the 13 and 50 crossover. After this 13 and 50 crossover, we had a flow of price to the upside, breaking structure. The second thing you want to ask yourself is the zone responsible for the break of the structure. As you can see, we had some imbalance starting from this area. This is where we had price correcting back to the 50 EMA. But remember, always manage your risk. please go and backtest this and see if this actually works out. But remember, we have to be selective in the market. Here's another example. As you can see, after the 13 and 50 crossover, the first pullback happened at this area. But if we look at the structure, this is what we have. We had a break of structure right there, as you can see. And the first pullback, in this case, is it's not clear. I'd prefer this area to be broken, but as you can see, this happened at a reversal point. This was the first pullback to the 50 EMA. But remember, being selective is very key in the Forex market. You might not find this on one pair every day, but trust me, if you are patient enough and actually go and check other pairs, you'll be able to actually execute good trades. But remember, it has to be clear. The 13 and 50 crossover has to be clear, and it has to be within a trending market. So when you find something like this, rather stay on the sidelines, right? If the market is ranging, rather stay on the sidelines. Wait for the market to give you a clear pattern and clear market structure, and you can definitely execute good trades. I hope you learned something from this video. Don't forget to leave a like, leave a comment, and hit the subscribe button if you're new. Also, join our free Telegram channel. Find the link in the description below.